Hey everybody, I wanted to do a quick review on simple moving averages and using moving averages to find stocks that are getting ready to go higher. So this chart right here is a chart from Microsoft. The ticker is MSFT, and this is a daily chart. So each one of these bars is a day. These two lines are the 30 moving average and the 13. And they're specifically called simple moving averages because they don't do anything special. It's just really just the average of the last 30 close prices for the blue line and the last 13 close prices for the white line. So this bar, for example, closed at 210.58. This one closed at 209.83. This one closed at 205.91. And these averages would just take all of those close prices, add them all together, and then divide by whatever the period is. So for the 30, it would take the last 30 of those prices, add them all up, and then divide by 30, and you would end up with 210.71, which is what that blue dot is. The same for the 13, it just would take the last 13 prices, the last 13 close prices, and add them all up and divide by 13, and then you get 207.80. Now, there's a bunch of different moving averages that exist. You can have a exponential moving average, a Hall, all kinds of different moving averages exist. And you can even use different parts of the price bar. You can use a moving average that just looks at the close. You can use one that looks at the high, the low, the open, whatever you want to use. You can use an average of the bar itself, meaning you add the high, the low, the close together, get an average price, and then use that for your moving average. I mean, you can really go crazy with moving averages, but I typically just use a simple one, which is just looking at the close price and taking an average of the close price over so many bars. And I normally use the 30 and the 13. I've used a lot of different strategies and stuff in the past, and the 30 and the 13 have worked the best for me. For probably about 3 years now, I've been using the 30 and the 13. So, on this daily chart, you can see Microsoft is kind of moving a little bit down, then made his way up a little bit, then kind of sideways, and then started taking off in the past couple of days. And the reason you use a moving average is because it'll help you get a sense for what the price is doing. Because if you just look at the chart with just the bars on it, yeah, you might be able to make out some kind of a pattern, but the moving average kind of smooths all of the price action out for you to let you get a clearer picture of what's happening. And the shorter the time frame, so like the white bar, the white line, I mean, is a 13 moving average, and the blue one is a 30. So the 13 is going to respond to the price faster than the 30 would. And what that means is, like, as the price starts to go up, the 13 is also going to move up faster than the 30 would, because the 13 is using more recent data. The 30 is looking way back here 30 bars ago and getting an average. The 13 is only looking 13 bars ago. So if the price starts to move up quickly, then these closes where the price is moving up quickly are going to exist in the 13 and be a little bit heavier in the average than it would in the 30, because the 30's got to account for all these bars all the way back here, and the 13 is just looking like this far back. So what I typically look for with the 13 and 30 is a crossover, and you can see a crossover is actually forming right here, where the 13 is going to cross over the 30. It's going to cross up above it, and that generally means that prices are going up. It's not a guarantee. There's other things that you need to look at, but for the most part, it means that prices are going up. Now, a lot of times you don't actually have to wait for that crossover to happen. Sometimes you can look at it before the crossover happens. So if you kind of start maybe at this bar right here, you can see that the 13 is moving up towards the 30, and the 30 is kind of coming down just slightly, and it's making like a little area in here that, I don't know, it kind of looks like, if you drew a line here, kind of looks like a triangle or something, or some people call it a flag. But basically what it describes is the price for these bars, these 4 or 5 bars here, has just been going up and down, but it's been staying in the same little channel, basically between these two moving averages. And if the price breaks out above this little space in here, it should probably break out and take off. And again, there are other things that you need to look at to kind of confirm all of that, but just the first thing that I look for is for the moving averages to start to line up and start to make sense. So let's look at a 15-minute chart, and we can also see a similar thing. Now, I was actually in this Microsoft trade last week, and I got in it here after I saw this crossover in the 15-minute chart. So that's what I look for first. Is a 15-minute chart. I look for a crossover from the 13 crossing above the 30, and that's what happened here. And as you can see afterwards, the price started to take off. So there's your crossover and the price started to take off. Now there's a similar crossover that happens here and the price didn't take off. And if you were just using moving averages, it's these types of crossovers that would kind of get you mixed up and you probably end up losing money. But like I said, there are other factors involved. One thing being the volume on the bars when it happens. Another thing being how the price is moving before we even get to this point. So, for example, let's look at an hour chart. Still got the same 13 and 30 on the hour chart. So, on an hour chart, this is that same bar where the crossover happened before. So, this is where I got in at. And this is where the crossover happened before where it didn't work out. So, if you look here, this is the 13, the white line, is actually crossing under the blue line, which is the 30. When it crosses under like that, typically that means lower prices are coming. And if you look here, the very next day, the price went down. Now, again, that's coupled with volume and some other things, but this is one reason why I avoided the trade on this day and waited until this day, because on this day, you can see that same little channel that we saw on the daily chart is starting to form here, where these two lines are coming together. They didn't actually cross over on the hour chart until the next day, but you see the same thing happen. They cross over and then prices go up. So this strategy is definitely something very valuable, and I recommend at the very least you should start to give it some attention if you haven't already, to consider using moving averages to help you find when stocks are getting ready to take off, and just looking for when these crossovers happen, when a smaller period like a 13 crosses above a longer period like a 30. And you can use different numbers, like you could use a 5 and a 10, or 10 and 12, whatever numbers you want to use. Give it a try. Like I said, I use the 13 and 30. It's been working for me for about 3 years, but in the past I've used different numbers, and it really depends on other things in your strategy to try to confirm what numbers to use. But regardless, it definitely helps me to find when stocks are getting ready to make a big move, and hopefully it'll help you. All right, if you like the video, hit like, definitely subscribe, and check down below for the Robinhood link. You can sign up for Robinhood and get a free stock, and I'll get a free stock too. All right, thanks.